Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, want to thank you guys for the support on the channel. Been having a ton of fun putting out these videos. I hope you guys have been learning, following along. If you are so inclined, if you like the content on the channel, feel free to like, share, and subscribe. Again, if you're so inclined, and if you are a subscriber, make sure to hit that bell button to get alerts on all new content posted on the channel. So having said all of that, I want to jump into the video here talking about a big mistake I made over the last couple of weeks of trading, and that is with the stock here, Equifax, EFX. As you guys remember, I put out a video about 1 to 2 weeks ago talking about Equifax, talking about the data breach in this very large consumer credit reporting agency, dropping the stock price from 145, 140, all the way down to sub 100 territory. Almost sub $90 territory before a nice jump back up in the price of the stock. If we take a look at my trading patterns on the bottom here, you can see I jumped into the stock here, bought 51, 21, 62 worth of stock, then went ahead and sold off at 52, 30, 40 for a nice little swing trade. You can see here selling off the stock at 93.40, but since selling the stock off at 93.40, you can see the stock has risen to 106.20. So really made a big mistake here and missed a great opportunity for a nice swing trade or even a longer term hold. And what I really want to talk about is getting out of a stock, when to sell off a stock. And I really believe that when you get into a stock, you should already have a price point in place with a limit sell in place to make sure that you are staying disciplined and having patience with the stock. I did not do that. I got a little bit of a panic attack, if you will. I panicked, I sold off, and in doing so, it really cost myself a lot of money here. So this really goes down to maintaining best practices, staying disciplined, and yes, you are trying to avoid loss and manage risk, but you really need to have patience and trust in what your original plan was for a particular trade. This particular trade, I was going to buy in, wait to maybe get a 10 or 15% swing trade and then get out of the stock. I should have put my limit sell order in and forgot about the stock. Unfortunately, did not do that. I saw the stock rising, was getting worried that the stock would drop even lower, so I went ahead and sold off. And in doing so, I did not maintain my discipline. I did not follow best practices and lost quite a bit of money. So just wanted to kind of highlight that in trading. You really need to know when to get into the stock, but even more importantly, you need to know when to get out of a stock. So great example here with Equifax. I had a very good idea, a very good trade being set up. I got out of the trade early because of some fear of not staying disciplined, of not maintaining best practices with regards to staying patient, and cost myself quite a bit of money. So just wanted to highlight that. If any of you guys have traded Equifax this past week here with this big decrease in the price of the stock, please let me know. Are you guys still holding? Are you going to be doing some day and swing trading, thinking that this stock may, rebound here a bit, a dead cat bounce, if you will, and then maybe will trend down further? Or are you holding for the longer term? Maybe this will be a 1 or 2 year setup for you and then selling off at $130, $140, $150 or so, because really the underlying fundamentals of this company have not changed at all. Yes, there's a big data breach with this company. Yes, there's a lot of negative press attention, but the fundamentals have not changed. This is still a very profitable company, and in 2 or 3 years' time, most folks will probably not even remember about this company. Yes, there are the implications that a lot of this stolen data will come back and continuing to give negative pressure on the company because of the credit reporting agency and how long term that information may be at risk. Essentially, a lot of this information you can't change like you can a credit card number. So that may be a little bit different story with this company. But again, the underlying fundamentals have not changed. It's still a very profitable company. And it's not a company that any company can come in and take market share from. There are 3 large credit reporting agencies. This is one of them. And really, it's unlikely another company is going to come in and snatch up their business. So I think this is going to be a profitable company moving forward. I really think this is a great longer-term hold. Unfortunately, I did not stay disciplined, did not follow best practices, and lost quite a bit of money on a missed opportunity here. But regardless of that, let me know what you guys did with Equifax. Did you jump into Equifax? If you did, what are you doing? Are you holding longer term? Did you do something like I did, jump out of the stock prematurely? Or did you sell off here after it kind of rebounded here with this dead cat bounce and made 10, 15% swing trade? Either way, let me know what you guys are doing with Equifax here. And would you jump back into the stock? Maybe thinking about doing that. I still think this is probably a good price point. Yes, there's already a 10 to 15% missed opportunity, but there may be another 10 or 15%, maybe even larger opportunity here to jump into the stock at this price point and waiting for it to trend back up again to the $140 or $150 range. Either way, let me know. And not to make the video too long, I'll kind of end it there. As always, if you are so inclined, feel free to become a subscriber. Definitely appreciate all the support on the channel. And if you are a subscriber, make sure to hit that bell button for all new content alerts on the channel. So kind of with that, I'll end the video, and we'll see you guys next time.